Welcome to Java, and thank you kindly for joining me. It's September 17th, 2025. It is also Wednesday, which is Discord Discussion Day. Now, my apologies for missing yesterday, but I had to miss either today or yesterday. And today being the much more important day, there's quite a bit to cover. Yesterday was a bit of a sleeper, so I thought it best to take care of stuff then. So we've got Fed in UK Day. We're looking at a possible stagflation solution, which is a significant deflation. But we'll talk about that as well as what we're running on at the moment, which is tech prosperity. Now, a word out about what we are expecting for the Fed rate cuts. Really, it's much more important to see what Jerome Powell is going to say when he takes to the podium at 2:30 in the afternoon, because he's going to be giving us some clues about the Fed forward. So we'll talk about that in a moment as well. Let's get started with what's going on in the markets. Now, greed territory, we spoke about this the other day, that is on the slow grind up into that breaking point. But at the moment, the markets were quite happy, still pouring money in, still enough retailers. And the big money still seems to be winding down a bit, or at least shifting where their funding is. So let's get going. The daily driver is the Fed, going to happen at 2 p.m. We'll talk about the calendar in a bit. Now, gold is the truth teller in economics. I've said this before. This actually shows what the true economy is doing, as well as inflation, regardless of what their reports are. This is the one teller in what is being set as far as prices. Now we've got the US dollar at a 3-year low, despite what other people are telling you. It has lost 10% in purchasing power this year alone. So whatever you were holding since the beginning of this year in inflation lost over 10%. So we've got the Fed vote coming up at 2 o'clock. We've got Stephen Myron, the first vote as a Federal Reserve governor. He will be voting today, as well as Cook, which they were trying to get rid of prior to this vote. So we'll see what happens with that. Now, President Trump is over in the UK right now, speaking with King Charles. They're expecting a few deals out of that. I'm mentioning that because the headlines could seriously move the markets. They're talking about good deals and a lot of background, and this is all meant to manage this distorted market. So don't get it wrong, they're going to come out with headlines for whatever they need to their purpose. Now, this is an interesting headline. I think this is going to change. I see it a little differently, but traders seeing no major volatility spike, even as $5 trillion in triple witching options expire Friday. So this isn't on the table yet, in my opinion. We are going to see volatility as it comes toward this. But at the moment, everyone is looking at the free, easy money and how much are we going to get out of these rate cuts. Once this is out of the way this afternoon, I believe this will be the next catalyst that they're looking towards. Now, markets pricing in 3 rate cuts they meant by the end of year. Here's where to put your money. But the more important part is they are priced in already. 3 rate cuts, which may not happen. It appears from what I see that the Fed is more likely to be a little bit more hawkish, meaning they may not look forward to 3 rate cuts. They're going to discuss the dissenters, and the dissenters are largely to be seen as those that want more or higher rate cuts. So 3 rate cuts or 0.5 instead of a 0.25. As far as the cuts now, I'm expecting 2 rate cuts this year, and 0.25 will be announced for today, but we'll have to see what it brings. Now, we're watching the 10-year yield in the bond market, which are showing some serious distortions going on. You're not new to this if you've been here before. If you are new, maybe you are, stick around. We'll explain this a bit more. So 10-year yield right above 4%. This is kind of the magic number. It is at a turning point right here. So we're going to be watching that for which direction we're going to be heading. dollar has lost strength now below 97. So very interesting there. We've got cryptocurrencies with Bitcoin holding above 116,000. And they also, more importantly, appear to be pairing a bit with some of the other asset classes, mostly equities. So stocks, looking a little bit soft finally, was growing into the markets and yesterday. But what is coming up is the volatility. So the VIX volatility index is increasing. I've been talking about this. It has been sitting at a low for some time. So we will be keeping an eye on that as well. Gold is above $3,700, even though this showing it down, it's only relative. So above 3,700 could pull back a bit further depending on what is announced today. But this is the other side of the 10-year that we'll be watching as an indicator. Now, oil down slightly, that's Middle Eastern tension, as well as speaking about an increase in supply. So futures forward, a little bit soft, but nothing major, all in a holding pattern until we hear from Powell. So this came out about the stock market's relentless rally threatening to turn into a melt-up. So there is more upside that could happen if this does indeed turn into a melt-up, which would be very rapid, but also not last. So the calendar, we're getting housing starts and building permits, but really all eyes are on this interest rate decision, which we're kind of expecting the quarter point at 2 p.m. But Fed Chair Powell takes a podium at 2:30. That's when the dissenters will be announced. That is when I expect the volatility in the markets, as well as everyone else. So tomorrow we're getting jobless claims, and it will be more all about employment and jobs again. So they're talking about political interference into the Fed decision. We know they're trying to get Cook out, but this has kind of been put on the back burner since that's kind of leveled out for the moment. Now, geopolitically, this is much more important. We're looking at the EU targeting the Russian SWIFT system. Now, they are looking at getting outside external payment systems, Russia and China, planning a clearinghouse now so they can avoid the West. So this split between the financial systems, they are looking at a replacement. Now, don't take this out of context. They've got quite a bit of ways to go. This is not going to happen anytime soon. It's just important to understand that these differences in trade are about to shift because they are looking at diversifying, if you will, if not outright dumping the dollar. So specific markets, we've got warnings coming out of Adidas, Walmart, as well as Home Depot and other major brands saying that tariffs are now pushing them to raise prices because it's gone on long enough that they can't eat the extra anymore. Now, Nvidia is down this morning because their chips were not outright banned, but China is encouraging internal companies, banning them from purchasing Nvidia chips for certain sectors. So down on that, a TikTok deal coming out. We don't have the details on that, but that is going to be a bit of a mover. US is suing Uber, so they're going to be a bit weak this morning. We've got Palantir, is what this is, versus Salesforce now competing for the government defense contracts. Now, these are massive contracts. I can't really get into this here, but this war right now in the software, who wants to be the main provider for war going forward? Now, Baidu getting a bit bigger because they are the chip replacement company, as well as the sector that is taking over a lot of what is happening there now. So we've got this about Bitcoin traders paying attention to Japan as economists are warning about debt implosion. So Bitcoin really, my opinion, is another asset. Really, what we need to watch is that debt market again, to watch for that implosion, to be ahead of this curve, because it's not going to be just Bitcoin. It's going to be Bitcoin, gold, real estate. They will all take a similar path, at least for a brief time. Now, what could be one of these triggers? Now, Sherwin-Williams just took away the 401k match for their employment. They've got to trim down on their corporations, as we're seeing other corporations are getting hit as well. What is the problem with this? Not just to employees, but to the equities market, because if they pull 401k match and other companies start doing this as well, the proportion of 401ks, the pensions for the United States, vested in the stock market, they are the big money. They're one of the players of the large money. So if they pull out or even cut down by not doing these matches, it could have serious implications forward to the stock market. Now, on the other side, gold, bullion, Deutsche Bank raising the forecast 4,000 2026. I think that's very realistic for predicted price for gold. No one knows for certain, but that does look entirely attainable. UBS, different bank, also talking about silver poised for an all-time high. So we know all of this is kind of edging out. These are real assets and how you should be positioned forward. Now, this is the flying car. This is actually artificial intelligence version bursting into flames prior to the first another example flight that they were doing. So this sector is down a bit on the morning, as you can imagine. We've got thousands of Americans told to avoid refueling cars. This is getting into oil in short because they're talking again about pollution and trying to bring back this green narrative. So telling Americans don't refuel your cars because that is what is causing all of these problems, not the upper end jets or all of these other issues. So just keep that in mind. We've got oil traders looking at getting super tankers to hold crude. So this is another pre-indicator, not a lagging one. They're trying to get these on the road from Middle East to Asia because they expect these to be profitable. So what does this tell you about it going forward? Be prepared with this. Now, a couple of other things I want to mention prior to letting go to the markets, because today is going to be very interesting. I've been saying this is a war economy. They're finally coming out. Congress added $100 billion plus since 2022, so that's less than 3 years, of unrequested weapons. So $100 billion. This is definitely a war economy. This is why two larger corporations in the tech sector are fighting over government contracts. That is a flag. If you've got top tech companies fighting for government contracts as opposed to the private sector, which should be more profitable, it is a problem. So the public sector growing too much. And what is this heading towards? Well, aside from them pouring more money into this because they're going to be using this new threat of another debt ceiling being reached so they can plow more billions into this war spending, we've got Pete Navarro calling X a cesspool, urging to fix this by ending anonymous posts. So what does this really mean? This means they want to target and track every post everyone makes. No more anonymous, no more free speech. They want this locked down. So with this, Marjorie Taylor Greene calling for the United States to be split up, saying that it's no longer safe. So while she is an advocate for a lot of these other freedoms, what is going on here is we're watching this massive descent and a lot more tracking moving to the digital platforms. And all of this going forward is so that they can have a greater sense of control. Now, I've got quite a few other things that I want to cover, but I want to get this off into the market. So I might be posting a bit later as well, if not later this evening, tomorrow. So until I see you again, my friends, and hopefully we'll be discussing things with you this evening. Resist.